I'm here in Dallas for REITWorld 2011, NAREIT's annual convention for all things REIT. Joining me is Juste, equity research analyst with KBW. What's your take on how 2011 has played out and where things are going?
Certainly heading into the year, there was a very uncertain economic outlook for the country, and I think most people, most REIT managements tended to take a conservative approach. We weren't seeing much job growth, and I think most tended to default to a more conservative baseline projection for their year. What we've seen, though, this year, which has been pretty surprising, is without material job growth in the apartment space, which I focus on, the ability for landlords to drive rents materially better than one would have expected 12 months ago had you told us that this year there'd be less than 1% job creation and you would be able to generate 7% NOI, which is our current projection for the year.
Now, what about acquisitions? Has the pace been what you expected, less, more, and will that change going forward?
I think that's generally played out as expected. There's a certain expectation that more assets would be coming to market, not only as over-levered borrowers for facing the music, as banks were putting more assets on the market. And so we've seen the companies, the public REITs, take advantage of their cost and access to capital to really be able to pursue and acquire some very well-located assets at, more often than not, very reasonable, good prices. Today, the cost for a high-quality asset in one of the core markets, core coastal markets, cap rates are in the high 4s, low 5s. But if you consider not only a very low cost of debt, but also pretty good NOI growth over the next couple of years, there's a chance for many of these companies to create some decent value there with these acquisitions.
Now, 2011 has obviously been quite a ride for investors. There's been a lot of factors, both here in the U.S. and globally, and it's left investors skittish in many ways. What would you say if you were speaking to someone looking to get into REITs as they survey the market and what the prospects are?
I think, and again, focusing more specifically on the apartment REITs, remind them that despite what you read on the paper, what you see in the news, apartment fundamentals are strong. And you have a confluence of factors which are driving that. Not only do we have a declining home ownership rate, which is driving a lot of people out of homes into the rental market now. A number do rent homes, but a good number of them also rent apartments. We're also benefiting from a reduction in supply, going back to the freeze in apartment construction during the downturn. And so what we have this year and next year is an overall reduction in the supply in the marketplace. You couple that with a little bit of job growth at the right age cohort, the 20 to 34-year-olds who have the highest propensity to rent, and you have a situation where, in the absence of strong job growth, we've been able to generate a good amount of growth. So that's one piece of it. These companies, too, are professionally managed, strong balance sheets, and there's a prospect for dividend growth across many of the sectors, particularly in the apartment space as we sit here today.
Thank you very much for joining us.
Thank you.
For more from REITWorld 2011, be sure to visit REIT.com.